Welcome to the Accendo Trades Group. This is our weekend wrap-up trading plan for December 26, 2009. Our website is blog.accendotrades.com, where we put together effective video technical knowledge trading plans on a daily basis. Trading plans keep us focused and disciplined and keeps us abreast of what's coming down in the market that can affect our existing trades. Or, as we're scanning for new trades, we need to see what's going to affect our trades. But more importantly, it cuts down on our time so that we can spend time with our family. The week that was, well, obviously we ended up for the week. The market, all three major indexes reached 52 weeks highs. 10 out of 10 sectors ended up for the week. But of course it was on light volume. You can see the NYSE had 800 million shares as compared to the normal 1.4 billion shares traded on the market. So, the stereotypical statement of rising market on light volume is bearish. We'll see. We'll take a look at some charts. There wasn't a lot of compelling news out of the market. We had some information. As far as corporate news, we had Walgreens, better earnings, and Conagra also had some news out of RAM. But again, nothing that moved the market. We also had very little mixed economic news. The third quarter GDP did not grow as much as anticipated. We're expecting 2.8. We got 2.2%. We had some home sales data out there. Existing home sales were stronger, but then new home sales weren't. So it's kind of a mixed bag there. But as you can see, this was the worst decade for the stock market since 1930, which is obviously greatly impacted by not this year, because as you can see, we're up big for this year, but the last 2 years. Going into next week, not a lot of economic data also to move the market. And again, we have another holiday short trading week with New Year's Eve and New Year's. Closed early on Thursday, closed on Friday. So not a lot going on there. And as you can see on the earnings front, we really don't have a lot that's going to move the market. So let's take a look. Okay, so normally, we would be looking at our overview and our internals, but of course with the light volume, they're going to be a little skewed. So we're going to do a couple of different things just to give a nice overview of where we are as we enter the end of the year here. I'm on my Thinkorswim platform, and we're going to start off with the ES. And of course, this is the March low here, and as we head up, you can see a couple things. First of all, this is a linear regression. I believe a standard 2-period linear regression, and you can see basically we've gone up rather nicely and stayed right here in the middle. We haven't come down to test the extremes of the deviations, and we certainly have not pushed up to the top. We just kind of hovered right here in the middle. So that's one thing to notice. The second thing to notice is that on our market breadth, again, this is the internals indicator, and we're heading to the oversold portion of the indicator. One thing to say about that again is that obviously we've had light volume, so it's going to be a little off. And then also you can see that our advanced decliner has been rather green. Let's switch over to the YM, which is the Dow Jones E-mini future. And let's make it a little bit bigger. And you can see basically the same thing, hovering in the middle of our linear regression, approaching the oversold mark, and advanced decliners are actually pretty green, which is helpful for keeping us in the middle and not allowing us to come down and touch the extremes of our linear regression. Now we are switching over to our daily charts, starting off with the Dow Jones. And the first thing we can see is that, we talked about this 10,500 level several times, and you can see that we did break above that, above these wicks here, with this light volume move. And so we certainly got to put into perspective that it was light volume. The other thing that we should note is that on the initial pullback of the week, we came right down to our uptrend line from the March lows, and that was support. But also notice that this was also a 2007 downtrend line, so we're kind of hovering up that, and our moving averages are continuing to be our friend. Now, where might we go? There's a couple ways to look at this as far as where we might go. You got to kind of eye it a little bit, but first we have these 2005 swing highs here, and that puts us about 10,800. really doubt in the next week we're going to 10,800. Remember, trading is over for a lot of people. They've got their gains. You see that 44% on the NASDAQ, 30% on the Dow. A lot of people are just going to pack in their gains for the year, and I'll see you in 2010. So don't get too excited about that. Also, you can see maybe at 10,700 with these wicks here and a little support here from 2006. So there's potential target as we stay above the 50 moving average. Now there's still a couple of days left in December that could pull us back below that 50 moving average. But there's a couple potential targets that you might look at as we go into 2010. Switching over to the NASDAQ. And here we really see what the, because we had this great breakout here as we broke above the swing highs. And we have just continued to move up. Now, a little scary with the downtrend of volume here. But we still have a breakout. I mean, look at that. Look at that. So we've been looking at the monthly here. And first we talked about 2,300 with these 2006 swing highs. And that certainly still seems to be an area of interest, light volume or not. So that's one way to go. But again, we still have a couple days, and I know I'm talking on both sides because I'm saying the light volume, who knows what that means. But there's what the monthly charts are telling us to look for. Let's switch over to the S&P 500. And like the Dow Jones, we can see the breakout on the S&P 500, but really look at the volume. But we can see the breakout there also. And we'll switch over to the monthly chart. And where could we go? Looks like we're still trying to reach the 50 moving average with the S&P 500. I do want to point out one new thing that we're going to be doing for 2010. Most of you know that I started off with stocks and options, and even though I'm really focusing as far as investing for myself on futures on a day-to-day basis, I still have several investments in stocks. And so what I'm doing is on Facebook, and my name is Michael Glass. That's where I have all my Accendo trader stuff as myself, at Michael Glass on Facebook. And they have the Kaching Investing IQ app. And what I'm going to be doing is, if you want to follow me, view my portfolio here, also updates on Twitter for 2010 on what I'm investing, start off with X amount of dollars. And one of the cool things about Kaching is if they have what are called geniuses here, find a genius. You click on that, you find people, you can see how well they're doing for the year, and then you can open that account and have it traded exactly like that genius. It's a pretty cool app, pretty cool website, Kaching. So that's one of the new things we'll be doing for 2010. So for our stock folks, check me out, see what we're investing, and as I said, if you like the strategies, you can open an account and they'll trade it exactly like the genius of your choice. We have finally made it to Chapter 8 in the book Trading in the Zone by Mark Douglas, and it's about working with your beliefs. And in this introduction, he talks about the paradox that our mind goes through with association, and that the market is a series of up and downs movement. It's just a matrix. It's a bunch of numbers. And then we use technical analysis to define these numbers, to define these patterns. But each pattern is just an edge that is an indication that the market might move in one direction, one way or other. However, each edge is different, unique from the ones in the past. There's a different set of traders forming this head and shoulders patterns, forming the rising three pattern today than there was last year when this pattern formed again. So therefore, the outcome is going to be random. So our minds have trouble associating with the fact that the pattern implies consistency, but in reality, anything can happen. So you guys know about our partners. We have the Futures Trading Room with Alex as a leader. They have a 10-day trial for $30. You'll easily pay for that. And we made money on all this light volume, so definitely want to check out the Futures Trading Room. If you're going to start trading futures, we got a great broker for you. E-minis as low as $300. I just opened up a second chart. I'm trying some different strategies, and I opened up the $300 account just to try it out. And you get 20 free contracts if you join through us. And if you're ready to get into futures, we have a trading plan for you that will really put in the specifics. We have a video on getting started in futures, but the trading plan really nails in the specifics so that you can jumpstart your trading. Follow us on Twitter to get some of our alerts. Twitter will also alert you on some of the investment portfolio things we're doing on the Ka-Ching app on Facebook. Just search for me on Facebook and you'll be able to follow that. Subscribe to our podcast, and as always, trade at your own risk, guys. Happy holidays. I'll see you in 2010.